Hello guys, welcome to another video of my weekly breakdown. Today I'm gonna break down the second week of September. If I show you the news for that week, it's the whole week is full of news. So that's the first red flag. That doesn't mean that we'll not take a trade. Obviously, in Monday, Tuesday is not a high probability day to trade, but those are the days where there is no news, so we will look for opportunity right there. And on Wednesday there is CPI and so much of news, high impact news, so we have to be a lot careful for looking for trades in this week. So that's the first thing. And on the GBP USD, once I start my analysis, I always start on the weekly because it's named the weekly breakdown. So obviously I'm gonna start it from the weekly. So for choosing the weekly bias, the last week candle closed so bearish. So just by looking at this candle, I am looking for sales, bruv. Just by looking at this candle, I'm looking for sales. And next week also, this probably I have already back tested, so I'm just showing you. It was a bearish week, and I am also anticipating next week to be bearish. First come and rebalance the price here and then go down. And if I show you my weekly analysis, this was my draw of liquidity. As you can see, X represents the liquidity sweep. That means this liquidity here got swept, and there was also a weekly demand zone right here, and this demand zone was valid because of this break of structure, meaning a strong demand zone due to this break of structure which it caused when it was bullish, right? So now I go to DXY to show you, to confirm my bias. On DXY it closed a bullish pin bar, and we know that when a bullish pin bar, we know candlesticks, we have studied candlestick, and we know when and how a candlestick forms, candlestick anatomy. Yeah, so this candlestick clearly shows me that the market was down, went down, came up, the buyers are still in control, and until and unless the seller shows us content and give us confirmation that it's starting to going down, we are looking for buys, bro. Whenever a knife is falling, you don't want to catch a falling knife, you want to continue with the knife. Because if you try to catch a falling knife, your hand can cut. That's the analogy we are using here. And this was the draw of liquidity if we are bullish for the next week. So simple. And now if I show you the daily, on the daily time frame on the DXY, I will only come for looking from a bias, okay? Because if I show you all the analysis and so on and so forth, it will be a very, very long video. So what I'm anticipating is a quick higher low Monday or Tuesday to make the low of the week, and then continue with the overall higher time frame trend. That is what I'm looking for. And whereas on weekly, I'm looking for a quick weekly repricing, where we can see here it did it awesomely. Very beautiful weekly reprice exactly to the T here. The previous week closed like this, yeah. So I was looking for buys. First the market came down, rebalanced the price on the weekly, and then continued to go up. That's a very good sign, and we'll look for the same thing this week. So now I will only come for in DXY for the daily bias. And now if I show you the daily, it was clearly bearish. On Monday I was looking for sales because my daily bias on Monday was bearish, because how this Thursday and Friday candle closed, I decided my daily bias like that. And now if I show you my 4-hourly analysis, the previous week high is so above, and that's also a sign that the trend is bearish right now. And I have marked the previous week low was here, which was very close, and might be the price can go and hit the previous week low first, and that will not surprise us. And there was a supply zone here on 4-hourly. What we can do is a quick retest of the supply zone to then continue to make the move to the downside. And this week we couldn't catch any moves, because there will be some weeks where you will not get any setups, and you don't want to force a trade whenever there's no setup. That's the first thing. Yeah, you can catch some continuation models. I'm also backtesting continuation models, and they work perfectly, no problem. There is no problem in continuation models. Yeah, so I was looking on Monday, I was looking for sales from this sort of supply zone here on the H1, but according to how the Asian range closes, I will adapt, obviously. So Asian range closed something like this. So look, does it make sense to go up all the way up here and come down? No, right? So what I did, I marked the M5 supply zone right here and M15 supply zone, sorry, but it was not clean, so I went to the M5 and pretty much fixed it. So I don't know why I came to DXY, but yeah, now I go to the 15 and show you the exact trade why I took it. And this was not one of the highest probability trade, that's why I didn't took it and I didn't even journal it, because look, my bias was bearish, everything was correct, the Asian high got swept, right, perfect, but my supply zone that I've marked was not mitigated. If this move happened after the supply zone mitigation here and then rejection from this area, I would happily take this trade, but this move happened after. Look, I'll show you. The price came first, the price went down, took the previous week low liquidity, huge amount of liquidity sweep, so obviously a pullback, came down here, gave us the rejection. This is the exact rejection we want to see when we want to sell in the 15 minutes time frame. This candlestick is also called the bearish pin bar, which shows that now the sellers are coming in the market and pretty much it might continue heading to the downside just like it did here. So it was a winner trade on Monday, and we didn't took this trade because I followed my plan. This trade was not in my plan, so I didn't took it, but anyways, this was a winner, so I thought of just back test it and show it to you guys so that we can learn it together. Now after a candle closure like this, I am looking for sells again on Tuesday. Why? Because it's a bearish pin bar, but also I have to go to DXY to confirm my bias. And when I go to DXY, this is also kind of a bullish candle, man. This Monday's candle is also looks like a bullish candle, so this week was pretty much no clear bias. The DXY was not correlating with GBP USD. So here on Euro USD, we can looking at Euro USD. Now it shows us that now the buyers are stepping in the markets in the Euro USD chart, right? So as we know, the Euro USD and GBP USD are correlated, so it also makes sense for Tuesday to go up. So on Tuesday my bias was not clear, so I was not comfortable in taking a trade, whereas also DXY, GBP USD and Euro USD all were doing other things, like they were not correlating, which is not ideal for us to trade. So I was not looking for anything, but let me show you. So pretty much this happened, the Asian range opened. So if I was looking for anything, it would be buys from this area right here. I would look for buys for somewhere around here, but it was not aligning with our weekly bias, so obviously it was a very, very low probability trade, so it was also not making sense with our weekly bias, so I didn't took it. And yeah, whereas now on to Wednesday also, now my bias is pretty much, it's showing that the retracement is now happened, and also the weekly repricing thing. The market first goes up, make the high of the week, and then goes down. So there were so many things telling us that it might continue to the downside, yeah. And also here the dollar was continuing to now make the bullish move, so we can anticipate the GBP USD to continue down. And whereas if we see to Euro USD, it's also giving a bearish pin bar. It's giving us so much good sign that Wednesday might continue heading towards the downside now. But where we go to watch the news, there was CPI news on Wednesday, which was we don't trade CPIs because whenever there is CPIs, the markets are very volatile for that day, and also there is a lot of manipulation, smart money, because there is news. So obviously there will be huge orders placed in the market, so the big banks will try to manipulate those orders, whereas that's why Wednesday I was not looking for a high probability day to sell. Here I was looking for sales on Wednesday. Let me show you. I was looking for sales on Wednesday from somewhere around here. Sorry, my bad. I was looking for sales from this M30 supply zone, which was made on Tuesday. Obviously that was a M30 supply zone. If I show you on the 30 minutes time frame, this was originally a H1 supply, but I refined it to the 30-minute supply zone, which looks like this. And the zones that I've been marking lately are working perfectly on the back testing, whereas we can see This supply zone was not respected, as Wednesday there was CPI, so not a high probability day to trade, but it was a continuation setup. But CPI I chose not to trade, and now we go on to Thursday. After seeing how Wednesday closed, obviously Thursday I was looking for a continuation, and Thursday would be a very good day to look for sells. Whereas if I go to DXY, it also DXY again confuse us, right? Sometimes DXY will confuse us, like I have written here. Sometimes GBP USD will have a very clear bias, whereas DXY will not. That's totally normal. In that condition, you go with the higher time frame trend, like your weekly bias. Okay, so I have written this for a purpose. Whenever DXY and GBP USD is not correlating, go with the weekly bias that you have for that pairs. Again, I go to Euro USD to confirm my bias. Even Euro USD is giving a sell signal, so obviously we are looking at 3 pairs consecutively, and it's showing that now sells makes more sense. So on Thursday I went onto the market looking for sells. And if I show you the news, Thursday there was huge news on GBP on 4 p.m. sorry, 4 p.m. IST, so we also have to be a lot careful. If I go to M15, it was a continuation model that I took, but not a high probability day to trade, to be honest. There was no supply zones. You can argue that this was a supply zone, but this supply zone was made on not in our session. We only trade the supply zones, the order blocks made in our session, that is New York and London. But this was made not in our session. There was also no zones here, no huge liquidity zones, so I was not looking for anything. If I was looking for anything, would have been a continuation setup. Look for continuation setup when there is no setup and no order block to trade from, and the strength of the trend is very much, as you can see here, there was a huge move to the downside, came back all the way to this supply zone again, and then we took a sell from here on this M15, got our 1:3, beautiful trade right here, and we go to Thursday now. After seeing a candle like this, obviously Thursday was also not a clear day to trade. This was a huge weak rejection. And if I go to DXY is giving, now starting to give a bearish. DXY has now closed as a bearish candle right here. So on Friday, obviously, if I'm looking for something, will be sells on DXY, and that will be buys on GBP USD. Friday my bias was not clear, so I decided not to trade. Whereas we can see also on Friday we didn't got any opportunity. As you can see, the Asian range started, and pretty much it was a continuation model again. The bias was not clear. I told you, whenever the bias is not clear, go with the higher time frames, like weekly bias. So it would have been worked, but on Friday also we didn't took the trade. So that wraps up the week for us, and it was a no trade week because of huge news, but it ended up a bearish week. So tomorrow when I'm backtesting, obviously my bias is again bearish. Just by looking at this candle, I can say next week I'm looking for sells again after this weekly reprice and this something like this. Whenever the weekly candles look like this, you want to trade here. When you can say the bias just by one instance, that's when you are the most likely to win the trades there. So yeah.